of my viewers are more or less familiar with the numbers that you've reported, so I'm going to jump straight into it. The volumes that you reported, 3% growth, domestic volumes, and seemingly from your commentary as well, it seems like that macro factor is proving to be a bit of a challenge. Demand is a little bit sluggish. There is also seemingly a divergence between how rural and urban is behaving. Could you give us a sense of what is playing out and how that is expected to shift, if at all, in the second half?
So I think if you look at quarter 2, obviously it was a better performance in terms of volume growth from quarter 1. We expect this to gradually improve, and I think we have given a guidance of at least a mid-single digit growth. We hope it will be better. I think there are two things. One is, of course, the macro conditions, and therefore rural continuing to be a little sluggish. And we believe a combination of three things. One is, of course, that the fact that although there has been some unseasonal rains, but overall the monsoon has been okay. The government interventions in rural continue. And thirdly, we are starting to lap a much lower base, because as you know that last year from quarter 3, rural had started slowing down. So we believe therefore rural is going to gradually improve. Internally, obviously, we have one specific issue, which is normally what happens is that the commodity prices, after going through a cycle, it stabilizes. But we are continuing to see gradual decrease, and it is a very gradual tapering of copra prices, which means every time there's a tapering, given the current conditions of inflation, we have to give value to the consumer. We have to pass it down to the consumer. So we have been forced to take 5 price drops over the last 7 or 8 months. Now what happens is that unsettles the market, because as you know, Parachute is a well-distributed brand. It takes 6 to 8 weeks, from the pricing decision to the last mile, especially in rural markets, for the new price to be discovered by the consumer. So every time there is a bit of unsettling, we believe that is now settled in. So hopefully by December, we'll have the right price in the market, and therefore volumes will recover. The good thing is the rest of the business, whether it's the urban discretionary part, which is the digital, the premium personal care and foods, is clocking very well. And therefore, once these two things are sorted out, I see a gradual recovery happening in quarter 3 and quarter 4.
So then to supplement that original question, the mid-single digit growth in volumes in domestic business, is that going to come primarily from Parachute, or do you anticipate that the trends that we're seeing in urban discretionary as well, there'll be a broad-based growth in volumes?
So I think the urban discretionary growth and the food growth will continue.
Okay.
I think what will move the needle is the Parachute growth and the value-added hair oils growth. And we are confident that at least it will be mid-single digit. If we get a little more favorable macro factors, that can improve.
So you pointed out the pricing, and I want to get to that in just a bit, but I'm keen on understanding the inputs that you have just mentioned. You mentioned copra, but there's also rice bran that you've seen a fall in cost of, but you've seen an increase, I believe, in liquefied paraffin as well as high density polyethylene prices during the second quarter. What is the commodity picture being likely to be like? You mentioned that copra prices seemingly have settled. Is that the case for most other commodities, or is it not?
So I think unless there is, and it's very difficult to predict given the geopolitical situation, how it impacts whether it's crude or vegetable oil prices. But I would say largely the inflation is over. I think especially in a majority of our portfolio. Obviously, still crude is a slight joker in the pack, but I think as far as copra is concerned and the vegetable oil is concerned, largely directionally it's over. So going forwards, we should definitely see sequential improvement in pricing. I think one of the biggest things that has happened this quarter and the last quarter is we took a one-time correction in Saffola pricing, which got back volumes, and I think now the volumes have stabilized. And as far as margins are concerned, although there were one-time costs last quarter, I think the margin situation is comfortable, and we will see a sequential improvement as far as margins are concerned going in quarter 3 and quarter 4.
Okay, on to the pricing. 5 cuts in Parachute, which you said will settle by December. What about the rest of your portfolio? What are the pricing trends there? One, you said that you passed on certain benefits that you've had, but in certain areas where you're seeing traction, are you able to increase prices? Are you able to garner slightly better margin in those pockets? What's the pricing scenario been? And also, the decisions that you've taken in terms of size of packaging. What can we anticipate in terms of those actions in the second half?
So I think largely the pricing action is over, I would say. Okay. Obviously, it's very difficult to predict what will happen to vegetable oils, but definitely I think I don't foresee any more price increases or MLH cuts which we have taken in certain brands. So I think it's stability. Having said that, I think in the next 2 quarters before the anniversarization happens, we will continue to see some deflation in terms of our overall portfolio, and which will start catching up sometime late Q4 and Q1 where the anniversarization stops. We have taken, when inflation was there, we have taken aggressive price increases. And therefore, it is extremely important, given the fact that the current demand conditions, we pass on the value to the consumer. For us, consumer value is important because volume and market share is of primary importance. I don't see any stress as far as margins are concerned.
Okay, to that point, and in fact, I saw that you've maintained market share in most of your key areas, and I think that is a factor of the pricing action that you have taken in the recent past. But on the margin front, 17.3% in the second quarter, I think to a certain extent that is also on account of inventories that you've had. In the third and the fourth quarter, you've guided for higher margins, and you expect, I think, for the full year, if I'm not mistaken, 18 to 19%. But this is still far away from the peak that you've achieved in the past few years even. So how does that move, perhaps once we're done with this uncertainty of this financial year, do you anticipate that that will actually trend higher, perhaps at the start of the next financial year?
See, I think, I would think next financial and overall situation, unless something very drastic happens in the geopolitical, this one, that overall situation will be comfortable in relative terms compared to this year. See, I think the issue is, as far as margin is concerned, that we believe that 18 to 19% over the short term and on gradually increasing is a situation we should be in. Having said that, I think our biggest focus is to get the volumes to the 8 to 10%, which is our medium term aspiration. I think that's the first thing we should do. We have also seen significant improvement in margins in the international business over the last couple of years. There also our focus is to continuously grow in double digits. We have had 7 consecutive quarters of double-digit growth, and we believe there is significant headroom for growth in spite of some of the headwinds we are facing in certain countries as far as currency depreciation, inflation is concerned. So in the immediate term, our focus is to get to that growth. I think margins will automatically happen.
When do you see that 8 to 10%? You've guided for mid-single digit. When do you see that 8 to 10%? Would you see it in this financial year, or would you have to wait for that to pass?
It's a difficult one to say, but as I said, that we have guided for something which is at least a mid-single digit. But we hope if some of the macro situations improve, that 8 to 10% is a possibility sometime in the next 3 quarters.
Okay, fair enough. In terms of investments and capacity, is there any expectation or requirement to increase or bolster capacities, and what's the plan there?
I think we continuously look at our capacity, and I don't see any significant investments over the next this one. Having said that, obviously we are very, very bullish on our foods growth, and as and when the investments are required and investment capacity in foods, we will definitely do that, because this is one category we believe that we are in a position to grow 30% plus every year over the next 3-4 years. So
product lines are going to be introduced. Is that what you're saying?
So I think you will see some entering into some new categories over the next couple of quarters. Yes, but as long as it fits in within our overall strategy of expanding the total addressable market by Saffola, it has to be entering into categories which are better for you.
Understood. All right. I think we've had a holistic view, and wish you all the very best, Saugata, for the rest of the financial year, of course, and look forward to talking to you really soon.
Thank you.